Every year, Americans send trillions of dollars to Washington, but almost no one asks where that money really goes or who decides. On paper, it's simple. Congress writes the tax laws, the IRS collects them, and the people pay. But in reality, the tax code isn't written in the open. It's written in back rooms by lobbyists with pens sharper than any politicians. Behind every loophole, every exemption, every corporate deduction lies a battlefield, a place where power, not principle, decides what's fair. In 1981, Ronald Reagan promised to cut taxes for all. The rich got richer. In 2017, corporations celebrated another trillion-dollar tax cut while the national debt soared. Each reform claimed to help the people. Each one quietly redrew the map of American inequality. Taxation isn't just about money, it's about control. Because in America, whoever writes the tax code doesn't just rule the budget, they rule the future. At the dawn of the 20th century, America was rich, but broke. The government relied on tariffs and excise taxes, squeezing farmers and workers while industrial barons hid behind walls of privilege. Populists called it taxation without fairness. Then came 1913, the year power shifted forever. The 16th Amendment legalized the federal income tax, promising to make the rich pay their share. For the first time, the US government had a direct claim on private wealth. Progressives hailed it as democracy's great equalizer. At first, the rates were tiny, just 1% on incomes above $3,000 and 7% on the ultra-rich. But when World War I erupted, Washington discovered something addictive: revenue. Income taxes financed armies, built roads, and filled coffers faster than any tariff ever could. By mid-century, the top tax rate soared above 90%, and the richest families, from Rockefeller to DuPont, scrambled to build foundations, trusts, and loopholes. Tax lawyers became the new nobility. The income tax was meant to balance power. Instead, it created a new battlefield, one where influence and access could rewrite the law. The government had learned to love money, and the rich had learned how to hide it. By the late 1970s, America was exhausted, inflation high, wages flat, and faith in government crumbling. Into that storm rode Ronald Reagan, promising a miracle: cut taxes, unleash growth. In 1981, he signed the Economic Recovery Tax Act, slashing the top marginal rate from 70% to 50%. By 1986, it fell again, to 28%, the lowest since the Great Depression. On television, it looked like freedom: fewer taxes, more opportunity, prosperity for all. But the fine print told a different story. Corporate loopholes widened, capital gains got cheaper, and the richest 1% began climbing out of reach. Meanwhile, middle-class deductions vanished, social programs starved, and the federal deficit tripled. America didn't shrink government, it mortgaged its future. Reagan's cuts changed more than numbers, they changed ideology. Taxation was no longer a duty, it was the enemy. Politicians learned to win votes by promising less government and delivering more debt. And the new gospel of the powerful was born: keep your money, let the rest pay the bill. The tax revolt wasn't a rebellion, it was a takeover. By the 1990s, America's tax code had become a labyrinth, 70,000 pages of rules, exceptions, and corporate favors. No single human could understand it, but thousands of lobbyists could exploit it perfectly. In Washington, power no longer belonged to elected officials. It belonged to the people who wrote the bills. K Street firms drafted entire tax provisions, then handed them to friendly lawmakers, often the very ones they financed during campaign season. Banks, oil companies, tech giants, each bought their own line in the tax code. When Congress debated reform, the real negotiations happened over steak dinners and closed-door briefings. A paragraph here, a sentence there. And billions shifted silently from the Treasury to private ledgers. Meanwhile, think tanks flooded media and hearings with polished studies proving that tax cuts create jobs. Their donors, of course, were the ones benefiting. It was lobbying disguised as scholarship, persuasion disguised as fact. By the 2000s, the richest corporations paid less tax as a share of profit than they had in half a century. And in the Capitol's marble halls, a simple truth echoed quietly: the tax code isn't written for citizens, it's written for clients. For decades, politicians promised that lower taxes would lift everyone. The numbers tell another story. Since the 1980s, the top 1% of Americans have captured more than half of all income growth, while the middle class has shrunk to its smallest share of national wealth in history. Corporations that once paid 30% of their profits in tax now pay less than 10%. Multinationals hide trillions in offshore havens, from Bermuda to Luxembourg, draining public revenue while schools crumble and hospitals close. The tax system that once funded highways and public universities now props up stock buybacks and luxury real estate. Ordinary workers still pay every April 15th. The wealthy pay when and if they choose. Economists call it revenue erosion. Ordinary people call it betrayal, because every uncollected dollar isn't lost, it's taken. Taken from classrooms, from healthcare, from the future. The American dream was built on fairness. The American tax code turned fairness into fiction. By the 2010s, taxation had become America's quiet civil war. The wealthy didn't evade taxes illegally. They simply designed the laws so they wouldn't have to. Carried interest, offshore subsidiaries, deferred income, words that turned tax evasion into tax strategy. Every loophole had a lobbyist. Every exemption had a donor. While nurses and teachers watched their paychecks shrink, billionaires borrowed against their assets and paid almost nothing. Even the Internal Revenue Service, once feared, had been gutted, its enforcement budget slashed by Congress. The watchdog was starving, and the wolves were thriving. The result? America's richest citizens now pay a lower effective tax rate than most of the working class. The law didn't fail. It evolved into a shield for those who could afford to write it. The Founding Fathers fought to end taxation without representation. 2 centuries later, they got both, but for the wrong people. In the end, the story of taxation isn't about money. It's about morality. A tax code is a mirror. It reflects who a nation chooses to protect. For over a century, America's mirror has slowly fogged, clouded by wealth, rewritten by influence, and polished by those who could afford the shine. Every loophole tells a story of a favor owed. Every deduction hides a deal made in silence. And every tax reform sold as fairness is often just another name for permission. Permission for power to feed itself. But history moves in cycles. The same outrage that birthed the income tax in 1913 can rise again. Transparency, enforcement, equality, they're not economic theories, they're acts of citizenship. Because when taxes stop serving the people, they start serving the powerful. And the moment a democracy forgets that, it stops being one. In the battle over America's money, the question was never who pays, it's who decides.